it's just after 2, so we will go ahead and start our webinar today. This is SCORE Southwest Missouri's Tuesdays at 2 webinar series. Our webinar today is Tax Tips for You and Your Business with our presenter, Michelle Goldsberry from PSC Accounting, and I'll introduce Michelle in just a moment. Before we do that, I want to let you know a little bit about our webinar and about SCORE today. This webinar is presented in partnership with the Springfield Greene County Library. The library offers resources for your business, including market and consumer research databases like Reference Solutions. You might have heard of that one called Reference USA. It had a name change. Demographics Now is an amazing database to do demographics research of all kinds. It's the same data that big corporations use. So if that's useful for your business, all this stuff is free with your library card. Meeting and co-working spaces. We've got a maker space with a vinyl cutter, laser engraver, heat press, podcasting equipment, and more. And of course, books, audiobooks, newspapers, and magazines in both print and digital format. And then we offer workshops and events for businesses and entrepreneurs, often in partnership with SCORE. I happen to be the workshop chair for SCORE Southwest Missouri and also a branch manager at the Springfield Greene County Library. My name is Katie Pattison. I'll be your moderator today. Few details about today's workshop. I am here to help. If you're having any issues, you can send me a chat. I'll see if we can work that out. If you have questions, you're welcome to chat me. Love to have you introduce yourself in the chat. We see we have some folks doing that right now. Welcome, Kathleen. Welcome, Trina. Our webinar here today will last about 1 hour. This is actually a little bit different than what we usually do. This webinar is all Q&A. So I have some questions that have been submitted by users and some general questions that we're going to ask of Michelle, our presenter today. So if you have questions for Michelle, please go ahead and add those to the chat or the Q&A, whatever you're comfortable with there, as they come up, and we'll address them when we get to that part of our session. All registrants will receive an email from SCORE within about a week of the event that includes a recording of this event. We don't have any handouts today, so we won't have those. And you'll also receive an evaluation email from SCORE. If you would fill that out, it's a very short evaluation. That helps us to plan for future workshops. All right, a little bit about SCORE, in case you're not familiar. So SCORE is a nationwide nonprofit that is there for you for the life of your business. SCORE offers mentoring and resources to support you from idea to exit. There are 3 things to remember that SCORE does, providing business advice and mentoring. So SCORE has volunteer mentors across the US and many locally here in our Southwest Missouri chapter. Our mentors have a variety of levels of experience, industries, different specialties. And if we don't have a SCORE mentor in our area that can assist you with your specific need, you have access to SCORE mentors nationwide. So it's a really great service. SCORE is funded by the U.S. Small Business Administration, so it's a great organization. SCORE also offers low or no cost business training, just like this workshop you're in today. Here in Southwest Missouri, we do usually about 3 workshops a month, but you can watch virtual workshops from across the U.S. From different SCORE chapters on the SCORE website at score.org. And speaking of score.org, if you have not been to that website, there are some amazing free business templates and resources. If you're making a business plan, a marketing plan, if you're looking for funding, there's going to be some great resources there that can help you, and that is all free to access. This is our kind of final workshop here in Southwest Missouri for the year coming up. Is government contracting right for your business? We'll have Alan Waldo from Missouri PTAC with us. That's happening December 13th. It's a Tuesdays at 2, so it'll be at 2 p.m. Central Time, a virtual event. You can register for that one at swmissouri.score.org and click on local workshops to see everything we've got coming up. And then just a little plug for volunteering with SCORE. Everything SCORE does is possible with the effort of volunteers nationwide. Our mentors are volunteers, our workshop planners are volunteers, our workshop presenters are volunteers. It's a great way to get involved in the business community. So if you'd like some more information about that, do reach out to me or head to the Southwest Missouri SCORE website, send an email, or you can also go to score.org/volunteer. Again, here's our chapter website one more time, swmissouri.score.org, where you can access all that info. And now let's go ahead and introduce our presenter. So Michelle Goldsberry is our presenter today. Michelle is a proud native of Kansas. She graduated from Fort Hays State University with a bachelor's degree in accounting and business administration. She joined PSC Accounting in 1998, shortly after became a valued partner. She received her accreditations from the IRS as an enrolled agent in early 2003 and continues her education each year to be diligent on the latest tax law and regulations. Michelle's a member of the Missouri Society of Accountants and the National Society of Accountants. Personally, she works to be an active member of the community by involving herself in various local nonprofit organizations and leads a very active life with her husband and children. Welcome, Michelle. Thanks for being with us today.
Hi, thank you, Katie. I'm happy to be here. I'm Michelle Goldsberry, and this is my 25th tax season. So I'm here to answer your questions that have been submitted, and I'm ready to go.
Okay, let's do it. So I'm going to jump right in. I did want to make just a note. We had a couple questions that were submitted that were not nonprofit questions, and Michelle's specialty is not in nonprofit, so we won't be able to answer those questions in our session today. But I did want to recommend reaching out to a SCORE mentor. We do have SCORE mentors who specialize in nonprofit that would be able to help with those questions. And again, you can do that at score.org. All right. Again, feel free to use the chat and Q&A as we go through here, but let's start with the first question, Michelle. What is a federal identification number for your business, and do I ever need to get a new one?
A federal ID number is also known as like an employer ID number. You don't have to have one if you are just a sole proprietorship, but it does help if you don't want to hand out your social security number to like vendors and when you're filling out 1099. So I would recommend you always getting one. They're free with the IRS for sole proprietors or for anybody really. You would have to have it if you are a corporation, an LLC. Banks require it for those types of organizations, partnerships. But it's basically an identifier with the IRS so they know who you are without using your social. So you would have to get a new EIN number if you would ever change business structure. Say you went from a sole proprietor to an S Corp or a sole proprietor and you added partners. So if you change structure or ownership type, added partners or something, you would have to get a new federal ID number. But other than that, you would not.
Okay, great. Thank you. Can you tell us the differences between hiring contractors and hiring employees?
Okay, so that's a big one, and it's pretty touchy subject with the state as well as the IRS. So typically there's some rules you have to look at between an employee and a contractor. An employer, there's a dedicated work and if they're controlled by you, you tell them what to do, you tell them where to show up and the hours that they need to work. Whereas a contractor, you give them a job and they kind of come. Contractor usually has other jobs that they do for other businesses or other people they're performing the same job for. They usually provide equipment. An employee, shows up to your job with no tools, no training. So you normally train an employee how you want your job to be done. Whereas with a contractor, they come specialized because they already know the job. That's why you're hiring them to do the job. So you normally do not train contractors. Employees also, you don't have a contract with them. They work by the hour. So they get paid by the hour. They keep track of their hours. Whereas with a contractor, you normally have a written contract with them for the job that sets out, the services, the time frame, the payment terms. They normally don't get paid by the hour. That's kind of a red flag when you pay a contractor by the hour. By you never follow them around and say, oh, you're doing that wrong, you can oversee the whole job and say, I don't really like the way you did that. Can you fix it? But it's really up to them. Like you tell them what job you want done and at the end of the job, you can say, oh, I really need that fixed, but you can't just say, I need you to clean that or I need you to do that. It's more of their baby. They can hire people to help on their job. You cannot hire people to help them. Contractor, you can't give them health insurance, stock options. Basically, in summary, you have to watch the relationship, you have to watch the scope, you have to watch how you pay them, the control you have over them, and the benefits, what you're providing them. So kind of those rules you have to look through by person. I mean, and it's not a certain way for each person either. It may be per job.
Gotcha. Okay, great. We had a question submitted to the Q&A, so I'm going to jump over to that one because this is a good time to ask this one. That is, if we're in the market for a new accountant, what are the top 10 questions one would benefit asking a prospective accountant we're considering hiring? And what's the process of moving from a past accountant to a new one?
I don't know that there's top 10 questions. I mean, I would say that you want to know that you can form a relationship with this person. I mean, you want to be able to gel with your new accountant. You want to be able to form a relationship with them. So you want to make sure that you have something in common with them. I always like to make sure that maybe it came from a referral, like somebody, like you're not just jumping in with somebody that you know, if what they specialize in, because if they specialize in restaurants and you own a gas station, you may not be the right fit for you. You may ask them, what credentials they have, because some accountants are not certified with the IRS. So, I mean, that may be something that would make a deal breaker for you. Even, what kind of software they use. If you're using a certain kind of software and you like your software, then, and if your accountant doesn't use that software, that might be harder to work with them. So things like that would be what I would ask. Also, if the employees, get things out timely, if they're ever backlogged or have to file a lot of extensions, that's a question that I would be asking as well, because I wouldn't want my stuff to be on extension. The second part, which was, I'm sorry, can you repeat that?
Yeah. So if you're in that process,
was it what you need to do the switch?
Yeah, when you're
So
in the process for moving, yeah.
It would depend on if you're moving like payroll or accounting, because with payroll, you would have to get all your PTIN numbers, all of your unemployment numbers, year-to-date payroll numbers. It's kind of better to switch at the end of a year, end of a quarter, and move that over generally. With your accounting, you kind of need a break as well. So end of a quarter, end of a year, to have things completed so that those numbers can be moved forward, because you don't want to start in the middle of somebody else's numbers. So all of that stuff would just need to transition from the other accountant of where they stopped.
Gotcha. Okay. Let's jump into another question. Can you talk a little bit about the new 1099K, like what that looks like for some sellers of eBay users or Cash Apps?
Okay, the new 1099K, it used to be $20,000, $600 throughout the year. The $600 could be personal money. I mean, they don't know. They're just gonna send you a form that says, hey, this is much money has been transferred to you. The form will go to the IRS as well. So its objective was to hadn't been reported, or hobby income that hadn't been reported. But it's going to cause some confusion on people's taxes, because some of that money is just personal transfers, like somebody's roommate is paying them for, to reimburse them for the night, or to pay them back for going to a movie or something. So when you're reconciling those 1099Ks, if it's personal, you got to take that into consideration. And, you know, you're going to have to keep good records of your Venmo account and if it is for business, you know, keep good records of if it's getting, I would recommend keeping separate Venmo personal and don't mix them together. Because all of those are going to have to go on your tax return at some point and be reconciled out.
Keeping good records, got it. We get a lot of questions about, for people who are starting a business or who are thinking about their business structure, how do we know what type of entity our business should be? Choosing that.
There's a lot of, right. And there's a lot of questions to be asked when you are starting your entity. Because it's going to vary for, you know, lots of reasons. It's going to depend on if you are doing it kind of a side job and it's not your specific business. You know, maybe you want to keep it small and keep it just as a sole proprietorship. It's going to depend on if you have other people going in with you as a partner or partnership, or it's, you know, if as far as liability, if you're just mainly concerned about liability, maybe you want to be an S corp right away. A lot of people don't use the C corp structure anymore because of the double taxation. So if you're just concerned with taxation, you might want to avoid that one. Most people go with an LLC to start off with, and then they can pick their structure because the LLC is just basically the platform, and then you can pick your tax structure off of what personal liability you want, how many partners are involved, how many people you want, how you want to pay your self-employment tax, or how you want to pay your payroll tax to yourself. I mean, there's a lot of different reasons you would look at different structures. So, and how much money you think you're.
Okay. Can you hear me okay, Michelle? We're just breaking up just a little there. Michelle,
I can hear you fine.
You can hear me. Okay. Okay. Let's move on to the next one then. So what's a good amount to set aside for taxes, and what if you can't pay by the deadline?
I can hear you just fine. I can hear you fine.
I think we have an audio delay, maybe.
A good amount would depend on first your structure. If you're a sole proprietor, probably about 35%, because you'll have your self-employment, and then 15% normally federal, around 5% aside in a different account and loss all year. So you don't wait till the end of the year to pay your taxes. Estimates every quarter to pay. If you get behind on those, you know, make sure you're sending in the tax forms. But if you can't pay them, call the IRS and make a tax plan to pay what you can, so you don't get any more penalties or incur any more penalties by not sending in the payroll forms.
Okay. We had a question in the chat related to something we were talking about earlier. Are contractors completely independent from their client, i.e. insurance, travel, expense, taxes, security, or personnel?
Yes, completely independent. There should be no reimbursement for any of that. They invoice you for the job and not for, pay my employees anything. All of that's completely independent. Their expenses are on them.
Okay. Let's see. What are the types of taxes I should expect as a small business?
Depending again on your business, you could have sales tax if you do retail, use tax if you buy things that you're planning to use for retail and then end up using them yourself. There's the payroll taxes if you have employees, which could be, unemployment tax, the Social Security taxes. You have, of course, estimates, your quarterly estimates for your self-employment tax. There's, of course, income tax for federal and state. There's, excise taxes. It could be, liquor taxes and other retail taxes for licenses and everything as well.
Okay. Can you talk about some audit flags for small businesses?
Some of the major audit flags would be misreporting income, especially with those 1099s. There's 1099s sent out for credit cards. There's 1099s now for those 1099Ks. The IRS gets all of those. So if your income isn't matching those, they're going to check you. If deductions seem too high for the industry or disappropriate for what they think they should be, you may get checked. If there's large amounts of cash going through your business, that could be an audit flag. Losses year after year could be an audit flag. Lots of round numbers. If everything ends in 00, all your deductions end in 00, that could get you looked at. Again, misclassification of employees versus contractors is an audit flag. Another one would be like if you use 100% of your vehicle for business purposes and it's the only vehicle you own, they're going to look at that because then you're not driving anywhere for personal time. So they would look at that expense. So those are some of the main ones.
Okay, great. I'm going to jump over to a question we have in the Q&A. With hacks happening left and right, I have a strong concern over the cybersecurity protections an accountant I'd consider hiring has in place. And I feel this is something that most accountants would consider private or don't want to be asked. Are CPAs required to protect accounts to a certain level? And how might we assess if they have strong protections in place and get the true answer on that from them?
As an enrolled agent or a CPA, we are required by the IRS to have a platform in place, and we have to sign with the IRS every year that we do have security measures in place that meet the IRS requirements. And those requirements are online with the IRS, and you have to match their standards. And we cannot not meet those standards. The way that most accountants do it, depending on what software they use, is we transmit our business, especially, we transmit directly to the IRS. So none of our data goes through the internet. It goes directly to the IRS intranet. So that's one of the things that keeps our data off the internet. Obviously, there are some data on the internet, but with the security measures blocking, the Wi-Fi connections and all of the other rules that we have to maintain, we try to do all of the IRS procedures that are put in place for us. And I would definitely be asking your accountant if they have those procedures, because that is a very important part of of what they need to have done, your data is going through there. Like everything that you are giving them can be hacked.
Right.
They would have no problem giving you that answer if they're doing things correctly.
Another good question from the Q&A. You mentioned earlier to call the IRS to make payment plans. How might we get them to answer the phone when I hear they answer 1 in 10 calls? Any tips to get live humans?
You can call the 1-800-829-1040, and they do have an automated system that you can set up your payment plan, or you can go to the irs.gov and set up your own payment plan online with them now. The online option works a little bit better. They have been getting a little bit better about answering the phone, but it does take a while to get through. I'm not going to lie. It did take several hours yesterday. But the online option seems to work better when you're trying to set up payment plans.
That's good to know. Thanks. All right, I'm going to jump into some of our questions that were submitted in our form before our workshop. So
Okay.
this one says, I'm concerned about recovery of business use of the home deductions at a later home sale. Am I correct in interpreting that if one takes the safe harbor method, this doesn't apply because no home depreciation is then deductible?
That is true. If you're using just the safe harbor method and you never take the actual expenses on the home, then you don't have to worry about recovering that depreciation.
Okay, let's see. Another question that was submitted ahead of time. I have been filing as a hobby for several years because I haven't made a profit, but in a seminar, a tax professional said that advertising, even such as having a website with products for sale, shows a profit motive. Could you discuss profit motive and how to decide whether to file as a business or a hobby for something like art or photography that may receive greater scrutiny?
Hobby and business are tough to determine the difference. So if you're putting in time and effort into doing advertising, it's more than likely that you're making yourself look like a business. When you file as a hobby, you don't get to deduct any of your expenses. So you wouldn't want to be putting money into advertising. So there's no single consideration to classify you as a hobby versus a business. It's just how you put yourself out there. It's how you're operating. It's all the circumstances that you're doing to carry out your business. If you're just selling a piece of art here or a piece of art there, that's a hobby. But if you're going to shows and if you're, having business cards, or if you're have a website, I would say that's trying to be a business. Even if you show losses year after year, that tends to be a business. The IRS can classify you as a hobby, but I would let them make that determination instead of yourself. If you're having expenses such as advertising, or that you're trying to turn a profit and you have expenses, then I would say you're a business.
Okay. Let's see. Can you talk about the best software to purchase for startup business to keep up with business transactions?
There's a lot of different software out there. I'm not a software expert for your business. All different businesses have good softwares. A lot of people choose to use QuickBooks because it's one of the easier ones when you're starting up. But I know that there's some industry specific softwares, especially for restaurants and, for retail businesses. I mean, there's some that keep track of tips and stuff better, like Toast, and there's some that keep track of inventory better, like QuickBooks. So it kind of depends on what you need in your business. So I would check out, go to the actual business entity type and see what people use in your area and go with that. There's not a specific one for generalizing everybody.
Okay. I'm going to jump back to our Q&A over here. Kathleen asks, would a two-person LLC taxed as a partnership have to pay payroll and or self-employment taxes?
That could be both. I mean, if they have employees, they would be paying payroll and payroll taxes for their employees. For themselves, they will be paying self-employment tax. They can't pay themselves payroll. So it will be the self-employment tax and estimates for themselves personally on their payments and their profit.
Okay. I'm sorry, Alina asked a clarifying question on the hobby versus business situation. She said, what do you mean by let the IRS determine whether it's a hobby or a business? I don't want to find out by audit. Is there a way to ask?
There's not a way to ask. I mean, you would just have to file your Schedule C, putting your expenses on there and taking that chance that they say that you're not a business, or you can just show all your hobby income and take no expenses. So it's up to you. If you want to pay the taxes for just all of the income, you can do that and not take any of the expenses. Or if you truly believe you're a business and you want to take that loss in your business and fight for your business expenses, then you can put it on a Schedule C and take that risk and let them determine it.
Okay, great. Okay. So I'm going to jump back to one of our pre-submitted questions here. They say, my friend and I very recently became co-owners of a small business. We set it up as an LLC and will be taxed as a partnership. There are no other employees, just the two of us. Any information or tips you have about this type of tax situation would be helpful. I know we just talked a little bit about that situation.
Yeah, I mean, that would be kind of like what we just answered. The partners would share their profits. They would pay estimates on the profit on their personal level. So they would file a partnership return, and then that profit or loss would flow to their personal returns. And they would pay estimates based on that personally, on their level of income, on their tax rate personally. They would split their income based on if they're 50-50 or whatever percentage they're splitting after expenses on the partnership.
Okay. Let's jump over here. So we talked a bit about, what questions to ask when seeking a new accountant. Robert is asking, do you know of any resources or avenues that would help us find the best accountant for a startup? So if we don't even know where to start, where should we begin to look for an accountant?
Google? I mean, your score mentor might know. I mean, ask there. I would ask, friends in the industry. Your friends always know, if they know a good one. I would put it out there and say, hey, who has a good one and why do you like them? Everybody has reasons why they like them. I would ask that question. We get a lot of referrals because, their neighbor likes, knows us and likes us, or the group of people from their church likes us. I mean, we get referrals because of word of mouth, basically. So I would just ask the group that you're in or the people that you associate with. They're going to be the most honest with you.
True. Okay. Let's jump into, we had sort of a multi-part question submitted to our form today. And I don't know, did you see that one, Michelle? I sent it just maybe 30 minutes before our thing here. I'll go ahead and read the first part. So my wife has started up an online retail business based off her various online accounts in which she cooks various types of food. We've worked with our CPA to set up the business, but I do have a few questions about some advice that they've received about what they're able to write off. So the first one is, we've been told that since my wife uses our kitchen as a background, so it sounds like she's demonstrating cooking.
Okay.
My wife uses our kitchen as a background. Everything we add, replace, or upgrade can be considered a write-off. This includes appliances such as refrigerators, stove, replacing the hood for an ultra quiet model for recording purposes, sink, countertops, dining area, etc. Is that correct?
That would probably be up to the accountant and how you are taking depreciation on the house. Maybe you don't want to take depreciation on those things because you're going to sell your house and you don't want to recover that stuff. Maybe you're never going to move and that'd be something you'd want to do. I would say it's going to depend on the amount of sales as well, because you're not going to want to write off an entire kitchen with very little in sales. So it's going to depend on a lot of factors. So I would work with your accountant on it to determine if that's something you really want to do. I mean, I would assume that it's probably going to be a percentage of it and not the 100% write off, because you still have personal use on those things. So that would be something that I would probably say that you're going to have to go through with your own personal accountant, because they're going to have to fight for you on that deduction.
Yeah. So what about in that situation, would our internet connection be a write-off since they require it for website maintenance, uploading of videos and such?
Yes, absolutely.
Great. Similar question about phone usage. Let's see, if I and other family members were to log in and leave comments for the sake of boosting engagement, would our phones also be able to be written off?
I would say you're pushing it there. I mean, I wouldn't do it.
Yeah. And then what about purchasing cooking supplies for demonstration purposes in the videos? Is it appropriate to purchase all from one account and then pay yourself back from your business account as long as you keep detailed records of the receipts and what supplies are used for?
You can. I don't like commingling funds, personal and business, but as long as you have the fund, the receipts to say this was bought personally, but I'm paying myself back with this loan money, then that's fine. I just don't like to mingle personal and business. So, but as long as you're keeping good records and you can prove what you've done, then I would say it's absolutely
Okay. Michelle might be frozen. Can you hear me okay, Michelle?
Yeah, I sure can.
Okay, great. We have just a little delay.
I can hear you fine.
Okay, good. So one more question related to this one. If outside financing were to be obtained, would the repayment of the principal of the loan be able to be written off or just the interest paid? Or depending on how the repayment plan is set up, would it be a combination of both?
It would depend on what the financing was for, because normally you write off on depreciation what you're using the funds for. Like if you're purchasing equipment, that equipment would be depreciated. So then you wouldn't write off the principal part of the loan again. It would just be the interest. If it's just a capital loan for cash, you would never write off the principal part of that. So it's going to depend on what specifically you got the loan for. It would never necessarily be the principal part of the loan, though. It would be what the item was and the interest.
Okay, great. So let's jump a little more general and talk about just deductions in general. Are there things that are common deductions that we should know about, or anything new in that area in the last year or two?
And common deductions are always work-related meals, travel, business mileage is a big deduction. Supplies, office supplies, the phone and the internet, as we talked about with the kitchen. Interest, like we just spoke of, bank fees, insurance, advertising, education, things that are associated with your business that you're using for your business are normally going to be deductible if you're using it in the course of your business. There aren't many changes in deductions for this year. Meals are still 100% for this year, whereas in 2023, they're going to go back to 50%. And that's really the only difference that I see for this coming up year. Mileage rates changed in July 1st. They went up to 62.5 from 52 to 23.
Okay. So let's, we had sort of, y'all can ask more questions if you'd like. We've got, just about 15 minutes left. And I've run through our pre-submitted questions, but Michelle, we had one more. What are tips in general for small businesses?
Tips in general would be keep great records. That's going to be the most common one. You really want to make sure that you have a handle on your profit and loss, that you're watching that closely monthly, at least, that you're reconciling your bank account and knowing where you're at least monthly or quarterly, so that you know where you are on taxes and not waiting till the end of the year. Taxes seem to surprise a lot of people at the end of the year, and they really shouldn't. You should know, what's coming at you. It should never be at the end of the year, you're surprised by your tax bill. Other things would be, you can't assume that the tax law is going to stay the same from year to year. So you have to take those deductions into consideration. If they're going to help you that year, you might take advantage of them that year, because the law may change the next year. So if you need those deductions, you may, use your strategy for that year and not rely that it's going to help you the next year. And like I said, just don't get behind on taxes. And if you do, then get your plans in place to where you can catch up quickly, so that your penalties don't build and build and you get further behind.
Okay, got a couple more questions. Alina's asking, on mileage, if one goes to town for, say, two personal stops and one business stop, how do you determine how many miles of the trip are business?
I mean, if you're going first to the business stop, then you count from the business stop. But if you're going first to a personal stop, you count from the personal stop to the business stop. You have to kind of judge where you stop first. Like if you're going to town to pick up your kid, you'd go from where your child is to your business stop next. So start from where your personal stop is and go from there.
Okay. We've got a question on bookkeeping software. This person says, I'm a solopreneur just starting to provide holistic health consults online, and will likely start selling different digital courses and classes, and possibly start an e-commerce store for health products in late 2023. I don't have a budget to spend dozens per month on a major QuickBooks plan. Wave Apps is free and allows sharing bookkeeping with an accountant. Would QuickBooks Self-Employed, which seems to be the most basic monthly plan, be a big upgrade? Are most accountants set up for Wave Apps?
I think that you can find accountants that do both. I think that some can work with you on whatever software that you choose, because they can dial into whatever you're using. So I think that you can find an accountant to work with whatever software you're using. And most accountants will, if you're comfortable using that software or whatever, even if you're using an Excel spreadsheet, they'd be happy to work with you. You don't have to have their same software.
Okay, great. If anyone else has questions, you can feel free to submit those. Michelle, is there anything that we haven't asked that you feel like people need to know? Or anything that's commonly asked by your clients?
I think that just make sure, like if you're starting out and you're using personal funds first and you don't have a business checking account set up first, make sure you're keeping those transactions so that you can pay yourself back. Keep those receipts that to write into your business. Make sure you get those expenses written off. And again, try to keep like a separate credit card for the business only, and don't run your personal transactions through the business credit card. Always set aside your cash for your liabilities that you know are coming. Like if you collect sales tax, don't spend the sales tax money, like put it in another account, maybe open an account for your payroll liabilities. Like think ahead, think about what things you're going to have to pay by the end of the month and maybe move that to a different account when it comes to the IRS or the state as far as liabilities go.
Gotcha. We did have one more question come in. What types of businesses don't have to pay sales tax? What about when selling digital goods and services? And what happens when you deal with out-of-state clients?
In Missouri, digital downloads are not sales taxable, but they vary by different state. All the states in the United States choose how they're going to sales tax each item. So you would have to check with every state whether digital downloading is, or digital products are sales tax exempt. In Missouri, they are exempt. So you wouldn't need to charge sales tax on that or digital photography or anything like that. But when you're doing that, I would always just call the Missouri Department of Revenue, and they would tell you exactly, explain what type of business you're doing and ask them directly, hey, I'm doing it this way. Do I need to charge sales tax? Because there's certain ways that you can do it and there's certain ways you can't do it that you would have to charge sales tax. If you say you're doing photography and you are printing pictures and handing them out, you'd have to charge sales tax. But if they're downloading them, then you wouldn't. So you can kind of judge it by how they tell you to do it as far as the sales tax goes as well.
That sounds complicated. All right. Yeah, that's an interesting question. I was thinking about with a digital download, you would maybe hope to reach a larger audience.
And digital downloads are not taxable in Missouri, so you should be fine with those in Missouri. But if you're in other states, you'll have to call those state departments to see if those digital downloads are sales tax taxable in those states.
Gotcha. Okay. One more question here about commingling funds. If we just bought software, tools, and things for our business this past weekend, and we're about to incorporate in the next few weeks and open a business bank account and a business credit card in late December or maybe early January, how might we undo the unclean start having commingled in case we're sued for whatever reason in 2023 or a future year?
I would say you're fine because you haven't commingled necessarily. You've just been buying startup stuff. So when you move it into your business, move it in as a loan, like put all of that money or receipts, enter it in to your business as a loan from you and enter those expenses in.
Okay, very good. All right. Question on digital nomads. If we have an online business and are about to live in Florida for a few months, maybe 6 months after the new year, and then move to California for a few months, do we pay multiple state taxes? Do we need a special accountant that specializes in these cases?
State taxes or sales tax? Like state taxes?
State, yeah.
Okay. State taxes, Florida doesn't have state tax. California, yes, you would split up the year depending on when you moved to California and where your business was operating out of. So if you're operating in Florida for 6 months, those 6 months you're in Florida, that's taxable to Florida. The other 6 months would be in California.
Okay, very good. I'll give just another minute in case we might have one more question. Here we go. In that case that we were just talking about, can we file ourselves or need an accountant with the state taxes living in multiple states?
You don't necessarily need an accountant as long as you can split up on the software that you're using, file the non-resident for the 6 months you're in Florida and then California, as long as you are able to figure that out on whatever software you're using. I'm not certain how softwares do it. The do-it-yourself softwares do it, but I'm sure that you can do it yourself. I always, because accountants may catch something that you may miss, but that's.
Okay, very good. I think that may be one more question. Okay. If I didn't file my 2020 and 2021 tax paperwork yet, didn't send that to the government, but I paid above what I owed, can an accountant file electronically for me instead of me needing to file paper for the years?
Right now, the time frame to file electronically is closed until the beginning of the year. The IRS is not accepting e-files at this point until I believe it's January 5th or 6th. So you can file it electronically. You just have to wait till the new year when they reopen up the electronic filing. Otherwise, you can get it done and then mail in the paper copies.
Okay, very good. Are there any softwares that I can use to do the taxes? Oh, hold on. Sorry, I was trying to understand the question. Oh, okay, I see. Okay, this is a follow-up question to that question we just answered. Are there any software programs that we can use to do the taxes using the software and then print at the end before mailing? So rather than filing electronically, printing, but using the software to prepare, I think is what they're asking.
I believe that you can get any of the do-it-yourself softwares and print them. I think it's just a buy option. If you use TurboTax or Tax Act, I believe that you can print any of them and mail them off. I don't think that you have to do the online option for any of them.
Yeah. Okay, very good. Do you know anything about when tax refunds are going to be provided if we file for a past year? Like maybe what the turnaround time is on that?
They're coming out rather quickly. They're they're just going in order now. I mean, they're not, if you file for 19, they're not holding 19s because they're still giving out 21. So they should come, within the time frame of 4 to 6 weeks is what they've been saying. I haven't filed anybody's past ones recently, so I'm not certain on the date, but I know they're not behind like they were.
Okay. The person had heard that paper filings may take 1.5 to 2 years for a tax refund check to come back, and is wondering if that is true.
Paper filings haven't taken that long. They were during COVID. They were taking maybe 6 to 7 months, but they haven't been recently, and they've been answering letters quicker. So unless there's a problem with it, I wouldn't think that it would take a year to process.
That's good news.
Yeah.
Okay. We've got just about 5 minutes left. If there are any other questions, I'll give it just a moment. Okay, here is one. I have an incorrect address on my credit report stating where I'm living. Is that going to be a flag when I file taxes?
Your credit report doesn't have anything to do with your IRS address. As long as it's correct with the IRS, then you're fine when you file your taxes. If you have incorrect address with the IRS, you can always file a change of address with the IRS online with the IRS, but as the credit report doesn't affect the IRS.
Okay. Oh, okay. Just a little more information on that question. The other address is in another state, which is why I had concern. The address was with Chase Bank, which is going to automate a 1099-K, I think, with that address. So I had concern. So that sounds like the address would be wrong on the 1099-K.
I would get them to change the address on the 1099K so you receive it, but the IRS isn't going to care if the information is in your credit report or the 1099K has a different address on, because if it was a prior address or something, they're not going to notice that as long as the address on the return is your current address.
Okay. I think their concern was that because it was in a different state, would the IRS think they had lived in both states when they had not? Maybe.
I mean, they may question why it's going to that state, as far as why the address is marked like that. But I would just call the company and have them switch the 1099K address before tax purposes come out for the address comes out. Otherwise, you won't receive it in the mail and not have the correct information to file anyway.
Right. Okay. All right. One last question. This is a good one to end on. Does having an accountant do our taxes lower our audit risk?
They say it does, but I don't necessarily know 100% if it does or doesn't. I think that having an accountant, they know what you can and can't take and what looks crazy and not crazy. They know what to look for. They know the rule, or they should know the rules better as to what deductions you can take and where to put things. So I think that would be why they say that it lowers the risk. I don't know if that's 100% true or not true. I think if your taxes are easy enough that you can do them yourself. I think if you have a business and to know what the current laws are and what credits are out there for your business. So I think they're a good tool to have in your pocket if you have a business. But as far as the audit risk, I don't know.
Yeah. Okay. Well, Michelle, thank you so much for your time.
You're very welcome.
Your
Thank you.
expertise. And thank you everybody for being here. Just a reminder, our last Tuesdays at 2 for the year is happening on December 13th, and we'll be talking about government contracting. So getting certified as woman-owned business, a veteran-owned business, minority-owned business, those kinds of things, if you might be eligible, what kinds of things the government buys, all interesting stuff. And Alan Waldo is kind of a hoot. So you should come to that one. You can sign up at swmissouri.score.org. I hope we'll see you all there. Thank you.